it was interesting. I was sort of looking at everything right now, and I mean, crypto is heavily tied to the macro economy, and those that think that isn't is, I think it's just not factual. The macro economy has such a huge, I guess, influence on how crypto goes because of inflation rates and tech stocks and all sorts of different stuff is really putting a compound, pushing crypto down.
Yeah.
What we've also seen recently in Australia is a lot, well, not even Australia, but everywhere, the layoffs in crypto.
It's huge.
So there's a prominent crypto exchange. So a prominent crypto exchange in Australia recently laid off 21% of their staff.
It's huge.
Massive. And only a few months ago, like early this year, were growing at a rate of we're hiring one a day. So that's a huge shift, right? And that's not just one exchange. There's a lot of exchanges across the world.
Yeah.
And also tech stocks and tech companies laying off, a shitload of people. And this is, due to the amount of capital that's coming into these businesses reducing. People are spending less money because inflation's going up. They have less money to spend. And businesses are making less. And valuations are down. It's a bloodbath.
It's like when we saw the post default alive. Is your company default alive from Y Combinator?
Yeah.
And everyone's really taking that to heart, and they understand that this is not going to be a quick 2-3 month thing. It's going to be a long period of time. And not only has the money dried up, but the valuations that if you do raise is going to be a lot lower. So the projections you had, the scenario planning is going to be very different. Money's dried up for a lot of reasons. So people have lost money in the stock market. Cost of capital is more expensive with interest rates going up. Yeah. And if we think about crypto, crypto is based on money. You need money to invest in it. That's how it works, right? Yeah. So it's not this decoupled, non-correlated asset. It just doesn't work that way. It's still tied to monetary and fiscal policy in the real world. In the future, it may not be, and they may be operating different systems, and there may be more incentives to do so. But at the moment, they're just not there. And even crypto companies are feeling this. Like everyone across the board needs to tighten their belt. Like crypto companies are funded by VCs, which are just in the normal kind of Web 2 world. Yeah. And that's where the capital is coming from. Yeah. And their outlook is at least kind of 16 to 18 months to tighten their belts.
Well, Jerome Powell came out and basically said, we don't give a fuck how the economy goes. Even if it comes back, we're not slowing down the rising of the interest rates. Basically said until next financial year, this is the direction we're going in. Kyle, our TA trader, Collective Shift, was talking about the markets rebounded the other day when they thought the rising of interest rates were slowing down. And then Jerome Powell came out and apparently literally he walked up in front of the camera or whatever for his presentation, and his tonality, his way of talking, he literally wanted to destroy the markets. He's like, we are nowhere near done, basically. We will continue the rise in interest rates. We need to get inflation. He basically just came out and physically, the way he presented and spoke, controlled how the market's going. How crazy is that one person or one entity can have so much control?
It's so wild, isn't it? And for people to base their forward projections just on this and looking at the tone, the words he used, the sentiment, all of those kind of things.
How he looks, how he's presenting, what he's wearing.
This really tells me that it's interest rates can go up. That's just a mechanism. But they're trying to work out the hurt across the economy and how interconnected it is and how it's going to be. And people are genuinely fearful. I think we've had it since the GFC, very good for a very long time. Yeah. That's what, 2008, 12, 13, 14 years of pretty solid growth. We got pretty fat from it. We're all lining our pockets. Yeah. And now it's one of those things where, hard times breed strong men, which bring good times, which breed weak men, which breed bad times, right? And then the bad times build the strong men as well.
Do you think there was the founders and business owners across the board, got a little bit ahead of themselves in terms of spending and growth during that great time?
100%. Yeah. And you think about it, interest rates, for us didn't move for how many years in Australia? An abnormal amount of years. So you get used to that. Cost of capital is cheap. People are giving it out. They're like, things won't change. Yeah, COVID happened, but people were propped up. Some businesses folded, a lot survived. And everyone expected a big boom off the back of COVID. What they didn't understand was when you print shitloads of money across the economy, where it's 13 trillion globally since the GFC, what do you think is going to happen there? Something has to give. You have to raise interest rates to reduce spending. Prices go up and you inflate your way out of that debt. These are the hard times that we're going to experience.
And that's basically what they're saying. We have to go through the hard times, reset everything before we rebuild.
Exactly.
And we're going through right now.
And if you don't, your currency collapses.
Yeah.